So how the hell do you make bank during a stock market crash or recession? Over the last 10 or so years, we've seen a lot of new investors come to the market with the ease of access of trading brokers like Robinhood, eToro, 212, Webull, and the list goes on. There's a lot of new traders coming to the market who've never experienced a stock market crash or a recession. And if the last couple of weeks are anything to go by, I'm sure a lot of people are aware that a correction could happen at any time, if not a full-out stock market crash. Now, many believe that in the US, inflation will have to come at some point, and when that happens, that could be the trigger for a full-out recession, stock market crash, or best case scenario, a decent sized correction. Now, you'd have to be a fool to think that a correction, recession, or a dip is not going to happen in the near future, and that the stock market is just going to continue rallying as it has been since the middle of the pandemic. Either way, one thing is for sure, you cannot time the market. But how do you protect yourself so that you can make bank during a crash and recession? Now, in this video, I'm going to be giving you some of the tips that I actually used in the last market crash in 2008 when I was a wee baby financial advisor. Now, for me personally, I do think that we're going to get a dip correction and then a slow rally back upwards before we get that full out stock market crash. If we look historically, we are way overdue a stock market crash, and I'm not talking about a little V-shaped recovery that we got last year. I'm talking the zombies are coming, get your tinned food ready, and yes, that might be a spoiler for later on in the video. That said, as always, this is not financial advice, this is just my personal experiences and opinions, so do your own due diligence when it comes to making any investment decision. If you are new here, please do consider subscribing and turning on the bell. If you do destroy that like button, it will help feed a baby wombat. And no, I haven't purchased the wombat yet, but if we get enough likes, I'll consider buying one. If you do like what we do here, we have some very exclusive perks, including a WhatsApp group on the Patreon down in the description. And if you want to sign up on eToro, do it via the pinned link, and you can get free lifetime access to the LWT chat room. Now on to stock market crashes and why they happen. Believe it or not, stock market crashes, sector rotations, and cycles down and up in the stock market are actually a good thing. It's a way of rebalancing the books and getting rid of all these people probably advertising on this video trying to sell you a course for a couple of $1,000s. Now, if you think long term, and by that I mean your investments are going for retirement, then you should be okay with a stock market crash, correction, or cycle, whatever you want to call it, because it means you're going to pick up your favorite, your highest conviction stocks at a much higher discount. That said, that's not what this video is about. If you want to know a bit more thoughts on how I feel about the market, let me know down in the comments. This video, like I said, is how to make absolute bank in a recession. Now, the biggest tip I can give you really when it comes to making bank in a recession is prepare ahead of time. And I'm going to give you some really good tips on that in just a second. But a big thing really that could definitely help is sort of seeing what the trends are and what the cycles are. So right now, as an example at the recording of this video, in my personal opinion, I think tech is starting to get a little bit overvalued, and that dip could happen. In fact, that dip could be currently happening as we speak. We've also seen things like EVs also pretty much go to the moon, and we've seen corrections there as well. And cryptocurrency, well, we could be entering into a correction market there too. So long story short, there's always some form of cycle. If we go back over the last year or so, we've seen obviously airlines, tourism take a massive hit, and they've slowly started recovering. But the key point really to take from here is the cycle itself. When people rotate out of tourism and travel, for example, where do they put their money? What tended to stay still or even go up? And if you want some examples of them stocks, I'm going to give you some in just a second. But the key first point really is have a plan. If a recession kicked off tomorrow, what stocks would you sell? Which ones would you buy? Would you sit in cash? What is your plan? How do you protect those crazy gains from GameStop that you leveraged and YOLO'd when it went to the moon? How do you protect your Bitcoin? How do you protect your, well, let's be honest, Nikola shares just crap themselves. So yeah, unlucky on that one. But if you have a plan, it's going to give you a fighting chance when that stock market does come crashing down. And I'm going to tell you a little bit how I did it in a previous recession back in 2008 to 2012. And hopefully that will help you make a little bit of a plan yourself. Now, the first thing I'd sort of advise you to do is get an Excel spreadsheet, pen and paper, or if you've got a Rain Man memory, just memorize it. Your portfolio should be broken into sectors. And the first sector really would be, what do you sell if you fear a stock market crash happens? Now, some of these stocks might be losses, some of them might be winners, But realistically, if you're buying Apple currently now at these near all-time highs, and Apple starts crashing or the stock market starts crashing, it wouldn't hurt to just take a small loss on Apple and buy it lower, provided you have full conviction. The other option is you continuously buy Apple lower and then you get a decent enough average anyway, but while you're waiting for Apple to recover, you could miss out on big dollar signs in certain stocks, and again, I'll come onto them in just a second. So these stocks that I'm willing to sell for a loss or a small profit, or basically the first stocks in my portfolio that I'd cut to loosen up some cash, would be my lowest conviction stocks, stocks that I don't really have the best average in, stocks that I'm not really fully green on or I'm close to that break-even point on. These type of stocks are the ones that I'd be willing to cut right away. And the reason we sort of have this plan is it leads on to the next bit, cash. Now realistically, in a full-out recession, unemployment should be quite high. You may not have a job and you may need access to cash. But no, that is not the reason why I'm saying you should have cash. I'm saying you should have cash because a recession breeds a lot of opportunity. So if you free up some cash from the previous mentioned sales, you can sit there patiently and wait however long it takes, have that safety net in place if you do lose your job or income, and then you can hopefully, with a bit of luck, buy in as close to the bottom as possible. Now the next sort of the planning phase would be have a list of defensive stocks, or stocks that you think would do well in a recession. Now these are quite easy to find, believe it or not, because we have historical charts going back decades. You can go back in history and see how companies like Walmart fared, even the oils or something along them lines, and some did well, some did bad. But for me, in a recession, there's a clear trend when it comes to recession stocks. Now that said, I did just mention Walmart, and I do think Walmart's a good example of a stock that you can look at buying during a recession. But again, we're still in the planning stage. For me, I think that you should always have companies like Walmart on your radar, and if you see a big enough dip in that company, there's no harm in taking a very small position. You should be sizing in every bull market on the way up into consumer staple stocks at a very, very slow rate. And that way, if a big market crash did happen, for example, and you've got 2 or 3% in your portfolio into companies like Walmart or things that might do well during a crash, then the win you have from Walmart or whatever company we're talking about in this case should offset some of the losses that you're going to experience in your portfolio, which will help calm you down and make more rational decisions. So do your research, have a list of companies. For me, for example, I've always got a list of around 10 to 20 companies that I think I should slowly start sizing into. And I'm always looking for value buys. And when I buy in, again, if you're a follower of the channel, you'll know this, I buy in very, very slow. For example, if I was allocating just $1,000 to Walmart, I'd buy 100 slots 10 times throughout the year on big dips, and I may never get that full $1,000 allocation, but I'm cool with that. It means I get a good average price, and I'm praying for a stock market crash so I can get the rest of my shares. So other than Walmart, what stocks should you be looking at buying right now in this crazy bull market we've been experiencing? Well, let's put on our white lab coats and do a little bit of an experiment. Let's say your current monthly income is halved, and it's going to be halved for a minimum of 1 year. Now in this scenario, think about what you would be buying for you and your household, and then look at that company. For example, during a recession, you're still going to need food. If your salary's halved, you're still going to need food. Walmart, Costco, etc. Now that said, you don't just aimlessly go and buy. You of course then do some research into that stock. Is it good value? Does it offer you a dividend? And then make a conviction, because Walmart and Costco, they're not the only supermarkets out there. But then you could go as fine down to the fine brands. You could go and look at companies like Coca-Cola, who tend to do well as well over the long period. And in a recession, you might be able to get some good value there. But the key really is think about what you would continuously be buying during a recession. What would you need if your salary was halved is the key point here. If your salary was halved or non-existent, what would you still need to survive? And these companies tend to be quite a good safe haven. And to be honest, over the long period, it's a good time to pick up some long-term lifetime stocks at good value if you get in at the right time, which is one of the reasons why I tend to buy in slowly on the way up as well as the way down. Now, if you're struggling to think of any sectors or companies you might buy in this scenario where your salary is halved, let's break them down into sectors. Consumer staples I've sort of touched on already, companies like Walmart, Costco, Pepsi, Cola. these companies are still going to be selling products in a recession because people need their Coke. And no, not that sort of Coke, but I'm sure they need that too in a market crash. But other than supermarkets, you can also look at the tobacco industry. They tend to do quite well as well. And of course, the alcohol industry companies in the UK are like Diageo, some of my go-tos in a good stock market crash. The great thing about these companies is they're all large mega cap companies, and most of them pay a good dividend. So while you're sat there panicking and the world's burning around you, you can still get a bit of income come into your investing account, which you could then take out and replace half of that salary you've just lost. Now, the second sector to sort of look at here would be healthcare. People, if they get sick, are still going to need treatment. You've also got companies like AstraZeneca, Pfizer, who are all listed. You can go and buy a decent sized pharmaceutical company, and I'm pretty sure there's loads of listed healthcare companies in the US that I've never heard of, because in Europe, we have free healthcare. But that said, in this healthcare sector, especially in the biotech sector, do your own due diligence more than ever, because these companies, especially the lower caps, can be very, very scammy and change overnight. So make sure you go into the big players, again, your AstraZenecas and so on. And to be clear, that's not saying AstraZeneca is a good buy right now, but I'm saying something of a similar market cap. Not financial advice, don't sue me. And the third sort of sector would be utilities. Now, if you don't know what utility stock is, think about water, gas, electric, energy, things like that. Oil companies are sort of really included in this sector as well. People still need to put stuff in their car to go. Now, that said, with the EV revolution, maybe the oil companies are not so good to go. And luckily, your mega cap oil companies like Exxon, BP, and Shell are moving into renewables as well. So they're sort of double covered in this utility sector. And I think utilities, again, they tend to pay a good dividend, provided you get a good company. Now, planning for a recession is not an exact science, and it's even harder if you don't plan for a recession and then you're in the middle of the recession and you don't know what the hell to do. So the key really is plan. If you're not looking to buy any of these sectors that I've mentioned right now, that's cool, but at least make a list of companies that you think might do well, add them to a separate watch list, and just keep a slight eye on them. I think a lot of new investors are going to get hurt very, very soon, and I really don't want to see it happen, because I want new investors like myself who come into the market with very little knowledge and build on this experience over the long term. I came into the market in the middle of a recession as a wealth manager. It was not easy. It was actually very, very hard, especially having to learn a foreign language at the same time. And no, I still don't know a second language because I failed at that aspect. But luckily, numbers saved me and I made quite a good career out of it and set myself up for semi-early retirement. But I have been planning for a recession and a stock market crash, even though majority of my portfolio currently is in what I call more speculative stocks, and I'm willing to sell majority of that and buy into utilities. If you're a follower of my Patreon, you will know that I've been buying into companies like Walmart over the last couple of months, even Coca-Cola. Now, I think it wouldn't hurt anyone to start sizing into companies that pay you a solid dividend that will be a little bit more safe in a market crash, because I do think that when this tech sector does come down, it's going to be a bloodbath and people will just hold on. Now, that said, if you're looking at buying Apple and holding it for 15 years and not going to complain when it comes down 30, 40, 50%, then fair enough to you, it doesn't really matter. But for me, if you're on YouTube and you're watching videos like this, then you probably want to become a better investor, and it would never harm to take some profits or lock in some gains and look at diversifying just a little bit of your portfolio. So really, if you're watching this far, the main thing to do is plan ahead. If you want to make bank in a recession and make money in a recession buying stocks, well, you need to really plan ahead of time and make sure you fulfill that plan. Planning is the key to making any investment work, and if you don't plan properly, then you're really setting yourself up for a piss poor performance. Now, what I'd like to know from you is, what stock do you think will do well in a recession? All you have to do, if you don't know what to comment, just comment a ticker symbol down below and we can have a little bit of dialogue there. Please do destroy that like button. I really do want to get a pet wombat, and I'll see you in the next one. Take care. Peace.